Welcome back. Joining us now is Kunal Shah from Nirmal Bang. Kunal, hi, thank you so much for joining in. And I want to start with gold prices first. And while we have seen an outperformance there, it seems to be taking a pause, a breather perhaps, ahead of the US tariffs announcement today in the evening. What's your sense? What are the kind of case scenarios that you are working with? And how are you looking at the gold prices life after reciprocal tariffs?
Okay, so I generally try to give you a clear view, and my clear view is it's time to book profit. So I'm of the very firm view that all the positive news, because of which gold should have been at $3,100 by the end of the year, in the month of April only, it has tested $3,180. So I think that all the positive factors like tariff, rate cuts, everything is priced in. Central bank buying, everything is priced. ETF buying, each and every good news is in the price. So even though I don't know what Mr. Trump is going to do tonight, but no matter what he does, the likelihood of gold opening down is very high. So for the first time, I'm saying that it's the time to take profits on gold. And if you are having a good inventory with you, you can perhaps hedge your positions by going short on the farm contract. So I think it's the time to take profit, and gold should be witnessing at least $100 to $150 of correction, profit taking, whatever you want to. 2850, $2,800 are kind of downside, which you can see over a period of time. But the trend is not going to be upward going forward, no matter what Trump says.
So are you saying that the all-time highs for 2025 are done with?
I think, yes, we have seen all-time high as per me. And the possibility of, see, what has happened is that after a 35% rise in gold prices, everyone is realizing and coming up with target of $3,500, $3,600. Doesn't make sense. They should have identified that kind of target at $2,000. So now trying to catch up $100, $150, not a big deal. So I think it's a time to book profit. The gold has become a consensus trade right now. You ask anyone what is the fundamental outlook on gold, everyone will say it looks bullish. So from the behavioral aspect also, I see that there is quite a bit of consensus that gold is going to go up and up and up only. But the fact is that the actual demand is faltering quite sharply. People are coming to jewelry stores to sell their golds. So I think it's an inflection point in gold market right now, and it is asking for a correction. And I think it should come in a matter of next 10, 15 days or 1 month's time. So timing is not something which I can predict, but the likelihood of profit taking is very high in gold.
Kunal, what's your sense on silver then? Because even as gold has taken a step back, silver underperforming gold in 2025 till time. Are you looking at further corrections for this one too?
I would recommend somebody who's been holding gold and booking profits, invest in silver. Same amount you should invest in silver, because silver is going to outperform. It's just a matter of time. A commodity which is in a deficit from last 4 years, and the industrial demand of the commodity is growing at a double-digit growth rate, especially from the clean energy segment. Silver is 100% underperformer. It's just a matter of time when metal takes off. The fundamental outlook of metal is also bullish. No matter this Trump volatility, whatever it comes, it's the right time to accumulate silver, and silver is poised to give you at least conservatively 10 to 15% return in a matter of next 6 to 7 months.
And how are you looking at the rest of the metals as well? Because we've seen some pause coming in here. Copper, after making those all-time highs on COMEX, and as would have been the case, has seen some profit taking. But same has been the case for the rest of the metal pack as well. Slight directionless trade happening there for the last couple of sessions now.
So the reason why metals are witnessing profit taking is because of the tariff effect. The actual consumers of these metals in the US are shying away from the market. They have done the stocking of inventory of copper, aluminum, zinc from last 3 months, and now they are waiting what Mr. Trump is doing. So it's because of that the actual demand has gone down a bit, and that's why we are seeing the profit taking. But the ultimate call on metal is bullish, because what China is doing is very important, not just US. And China has clearly mentioned that they are going to add copper, aluminum, zinc in their strategic reserves. So these are small profit-taking, small correction, what you are seeing in metals. The directional view in metals is bullish. And I am expecting another 10% upside in base metal prices in next 6-7 months. And whatever downside you are seeing right now, or tomorrow, if because of the Trump's announcement, if metal goes down, that will be a great opportunity to add metals. The fundamental outlook for metals for the year 2025 remain very bullish. The outlook on the US dollar is quite negative. So because of that, also you are going to see a funds coming and buying metals. So I think it's a time when outlook of industrial metals looks pretty bullish to me.
So, Kunal, what you're telling us is that book profits in gold and invest that money in silver for sure, and some part of that in metals also. Let me throw another scenario to you, and there are also concerns about recession or even stagflation coming in for the US markets. So, even as you're bullish on China, with US perhaps not throwing out those kind of numbers, would that cap many gains for many metals?
So yes, because 50% of the industrial demand of all these metals coming from China. So US stagflation, okay, recession is far off. US has come up with 2.5% GDP growth rate last quarter. So there's no question of recession, at least for next 6 months. Next 2 quarters, no possibility of recession. After that, nobody knows. But I believe that this tariff thing which is going on and this slowdown which is coming in the US, this will be used by the US to roll over their debt. And once they roll over, their bond yields goes down and they roll over their debt, believe me, they will start with the another interest rate cut cycle, no matter what is inflation. So they have another $3.5 trillion of debt maturing in 2026. So totally their debt next year will be $10 trillion. How interest rate can remain at 4%? So no matter what happens, interest rates are going to go down. And that remains very strong. That remains very strong reason why industrial metals, why land, why industrial commodities are going to do well. Commodity as a complex is going to do well. Gold also, I'm expecting a profit taking. I'm expecting a correction. I'm not saying it is going to go for a structural bear trade. So commodities will continue to remain in focus, and they are the best to remain in this kind of uncertain scenario. That you should have some portion of your wealth in commodities or commodity stocks.
Right.
Tangible it is.
Very strong words coming in there from Kunal. Thank you so much for joining in this afternoon. Manisha, thank you for joining in as well. Book profits in gold, invest in silver. That's the word from Kunal Shah of Nirmal Bang. But we call time on this edition of Halftime Report. Business Lunch for the next 30 minutes.